Interesting. Good evening, everyone. Happy Tuesday to all of you. Excuse me, while we doing this setup here, I just wanna excuse me while we're doing this setup here. Um, on the Instagram side, so folks who are on LinkedIn, good afternoon, and folks who are on Instagram, good evening as well. While we are on this setup, so Andrea is setting up herself on Instagram.
All right.
Set up
Do I
one
look
more.
do I look okay?
You look sharp on Instagram. And good evening, LinkedIn, to the LinkedIn family. So let's let me do one thing here on LinkedIn as well. But there we go. So while we're setting up one or two other things on the back end, folks, today we're having that discussion as it relates to understanding the value of cash flow statements in your business. And I have none other than my very good friend, and my very, very good friend, my close compatriot, Andrea Ragu, right? Owner and founder of ATR Business Solutions. Andrea, I want to tell the folks and they welcome.
Welcome everybody. Welcome Insta. Welcome LinkedIn.
All right. So today what we're discussing, guys, is that we are talking about the value of cash flow statements. And I always like to give some context to the entire thing. So here's the context, right?
Oh God. The
So
backstory.
the backstory, right? So earlier this year, as a matter of fact, maybe coming into 2021, Andrea is my accountant. She's the accountant for OPAAT-SWY, so she gives me all of my guidance, what I can and what I cannot do and stuff like that, right? And with that, there are a number of things that I sort of rely on Andrea on. While I could make certain, while I could just go ahead and make decisions on my own. I've learned that it's not always the best to just do that, right? So, so what I've really done is really working alongside Andrea as the company's accountant. Any particular decisions that I need to make, I run it by Andrea. Outside of that, also is that Andrea is also very, very pivotal to the business as it relates to particular things along the lines of strategy. How is it that we're going so far as it relates to the month and relates to the quarter, as it relates to our goals, right? So Andrea asked me to do an exercise, and that exercise was a cash flow statement, right? And while doing the cash flow statement, it was very apparent.
Very
I shit
apparent.
you not, guys. It was very apparent that I wasn't doing enough in the business. While there were opportunities in the pipeline, based upon the things that I wanted to do as it relates, let's say from an expense standpoint, both personally paying myself, etc., there was not enough business in the pipeline. Plus all the other things as it relates to all the other things as it related to our our objectives with partners that we may want to get involved with later on. All of those things would have changed, right? So hence the reason why I felt it was such a valuable. So I'm getting a little bit of an echo. I'm not sure where it might be coming from. Right. So folks on Instagram, let me know if where I think we're getting the echo from, or on LinkedIn, let me know if it's clear. Right. So it was very, very apparent that there was more work to be done. And that's where I first saw the value of cash flow statements. And in conversations with Andrea looking sideways on Instagram now. I'm not sure
Yeah.
how is that
I
happening.
try. Sorry, I try. I think.
Right. So welcome to Tiab R. Welcome to Alice. Pardon me if I'm not saying that properly. So Marissa Reds, Jamie does Honda, Heath Adams, if I'm saying that correctly. So
Heather.
Heather,
I think
Heather.
that's
All
Heather.
right. So thanks. All right. So welcome, guys. So we're talking about the value of cash flow statements, and also we're going to dabble again into the value of having your accountant close by to you, even if you're a solopreneur or entrepreneur and stuff like that. So, Andrea, my first question to you is: can you tell us a little bit more about cash flow statements? What are they? And then we'll go a little bit as to why it's so important.
All right. So a cash flow statement basically is a statement of cash flows. So it's clear in its name. It's a statement of cash flows. It shows ins, it shows outs. So there are two types. You can have past cash flows and you can have projections. So for the purpose of what we're going to talk about tonight, we're more or less talking about the projection side of things because that's the
Mm-hmm.
exercise that you and I did. But really and truly, your projections will become your past anyway, right?
Right.
So, but it's basically a statement of cash flows, and what it illustrates is that you're supposed to be able to see in and you're supposed to be able to see out. And then your difference is like your surplus or your deficit, as the case may be. So
Right.
that's it very simply put.
But isn't cash flow for big companies? I mean, we were a small entity. So OPAAT-SWY is like one or two people. So why is it necessary for me to be doing a cash flow?
Absolutely not. Cash flows are, listen, I always say these companies, these big companies, they were always small ones, right?
Right.
And they didn't get there by mistake and by luck and by guess,
Mm-hmm.
right? They got there by systematically employing some disciplined activities to ensure that they grow their business. And the monitoring of their cash flow is one of them from the perspective of understanding when to expect money, when am I going to need to spend my money, etc. So it doesn't matter the size of it. Um, it's an exercise that all entities, no matter their size,
Mm-hmm.
can employ to ensure that they see what is going on with their business.
Right.
It's not just for big companies. It's not,
Because
and it's even more important for smaller entities. I find.
right. Because a lot of the times, so like I'll tell you, so I would have heard cash flow before in the corporate space, but when you're a salesperson, you're not really interested in a cash flow. That's nothing to do with me, right? But the other time that I heard about a cash flow and where I recognized it was important is when I needed to get something done, and that was open a bank account, right?
Mm.
So what, like, how is it? Okay, so the bank is asking for a cash flow. You open the bank account for the very first time, and then you don't hear or do anything else with a cash flow again. That's so I kind of pushing again as to, like, apart from that, is it you're saying basically it's more than just opening a bank account?
Of course, of course. In fact, it's something I discourage business owners from doing a cash flow just for the bank. I really do.
Mm-hmm.
I prefer to say, listen, it's a tool in the management of your business, and it is not for the bank, it is for you. It is you who need to use it for your business. So, because think about it, it's almost like you are handing this thing to the bank for them to assess you. Why are you not using it to assess yourself?
Mm, right,
Right? So it's not just for opening the bank account, not at all.
right.
It is a tool that should be used in your business, and the byproduct of it is that you could submit it to the bank.
All right. So I'll say this. So this is now me giving a little bit of a testimony here because when Andrea did ask me, being a numbers person, when Andrea did ask me to put together that cash flow, in the middle of putting together the cash flow, I started to see where, as I said, even though I had things in the pipeline, I saw where the money was coming from. I also saw, because the cash flow wasn't just for a particular period. The cash flow was like a projection for 6 months, going on and on, that kind of
It
thing.
was for 3 years. It was for three
Yeah,
years.
for 3 years, right? And it really had me thinking. So from a business development standpoint, I saw the value of having that cash flow exercise being done, right?
Mm-hmm.
So what are some of the things that um, entrepreneurs, because mostly entrepreneurs would be not really understanding the value. What are some of the things that entrepreneurs should be paying attention to when it comes to utilizing a cash flow statement?
So one of the things that you want to pay attention to is the surplus or the deficit, first of all, right? So how it's laid out, there's inflows, outflows, surplus or deficit. So the first thing straight out the bat is that you want to be able, when you're looking at the cash flow, ideally you want to be able to see positive figures, positive surplus, right? Anytime you see a negative, it becomes a deficit,
Right.
meaning you would not, in that particular period, you won't have enough cash, right? And that would be a red flag, because it means if you don't have enough cash, you won't have funds to settle debts, whatever they may be, right?
Right.
It may be that you have a loan to pay, you have suppliers to pay, um, or you just won't be able to pay anything unexpected, right?
Right.
Because let's just say you do in and out and you get a flat out zero. It means if anything unforeseen happens, and you make that exact amount of, you get that exact amount of money coming in, but something happens, you wouldn't be able to have an unexpected expense. So one
Right.
of the things you want to look at is the deficit or the surplus. So the deficit would indicate I need some work, I need to do some work, right? I need to understand where I could get this money from. A surplus could also indicate, well, okay, yes, I'm healthy. I have extra cash. And it can also it could help you decide, well, okay, seeing that I have so much excess cash, what can I do with it? Right? Maybe I will now have enough to buy that new piece of equipment that I've been eyeing. Or maybe I have enough that I say, you know what, let me put aside a rainy day fund for the business, open a little fixed deposit, and I put that there. And I say, okay, at least I put that aside because my cash flow is telling me that I'm healthy, right? So
Right.
one of the first things you want to be able to do is to look at that. The other thing you want to look at as well, on the inflow side, you want to be able to understand if your inflows are actually matching when you did the sale, i.e., are you getting the cash when you incur the sale? So for a retail business, the answer is usually yes. I buy a product today, you go to a mini mart, the mini mart will give you credit. So the mini mart sales today is cash in the bank today.
Right.
However, if you're a service professional like you and myself, we tend to offer, there may be a credit term, or it may be a contract period. So we're working on this particular client, but based on how our contract was set up, I'm not getting the money until 2 to 3 months later, right? When we
Right.
actually reach a particular milestone. So you want to be able to understand if you have a difference, right?
Right.
And not that the difference is bad, but that you know it and understand why it is there. Is it there because you extending credit, or is it there because the customers are taking too long to pay and they're
Right.
being late, right?
So again, so this is just, and I kind of reiterating this, for those of you all that's hearing it. So I just want to shout out to Whole Health. I want to shout out to the Everyday Leader. I want to shout out to Neil Adams and Trinicita, right? And I'm also just putting up something here from on LinkedIn where Makai was saying that cash flow is like the pulse of your business, right? Now,
Definitely.
you Andrea said something there that stood out to me, and that is, so me being a service provider, it may take me, because of course you may have a customer where the customer is going to pay 50% down, and
Correct.
then the balance in whenever the project is finished, right?
Correct.
And then you also mentioned something as it relates to giving a customer credit. So even when we're looking at cash flow, again, from a sales standpoint, when we're making projections in terms of business that we're closing, I might
Mhm.
say, okay, well, our budget by the end of May would be, we will do $15,000 this month, and next month might be another additional 10 and stuff like that. However, you're really not saying that. You're saying that the projection of the cash flow, the projection of your budget is one thing in terms of your sales, but how
Mhm.
you're getting your money, like
Correct.
when are you getting the money for that
Correct.
business, right? Because
Yep.
if it is that, yes, you intend to do two projects in August, but you're not going to realize the income for those two
Correct.
projects until September. That's a totally
Yep.
different thing, because it means on
Correct.
the back end, an entrepreneur would not be able to perform certain things, whether it's pay
Mm-hmm.
themselves, pay staff, pay bills,
Mm-hmm.
because the money is outstanding. So am I translating that properly?
Yes, perfectly.
So
That is
closing the
exactly it.
business is one thing,
Correct.
but getting paid for the business is something
It's
else.
something else,
Hence the reason
right?
why the cash flow isn't so important.
And that's why sometimes finance and salespeople might be at loggerheads
Mm-hmm.
because sales, but finance is like, hey, listen, that's not translating into money into the bank first, right?
Mm-hmm.
You closing the sale and them signing the contract is different to us getting money to meet
Right.
our obligations. So
Right.
sometimes you find, salespeople get upset when customers get placed on hold,
Yeah.
right? The customer account gets placed on
Good.
hold. And the
Yeah.
sales guys out there, rel drumming up the business and, rel talking the sweet language of sales and going out there and stuff. And then when the customer places the order, oh no, it's because the customer is calling the sales rep, boy, what happened, Mike? All the finance people say, I can't get no more product. Where's
Mm-hmm.
that one? I thought you
Mm-hmm.
and I talk. I thought you and I good, right?
Mm-hmm.
It's two different things.
Yeah.
It
Yeah.
has
Yeah.
to it has to translate into money in the bank because that is
Right.
what actually helps you to settle your debts.
Right. So, and guys, if you all agree that that sales and finances always have a fight, you can drop some hearts on Instagram, because I've been in those situations before where we come back all excited from the sales standpoint,
Mm-hmm.
but there are certain particulars about the transaction that
Correct.
finance has a concern with, because finance is
Mm-hmm.
really okay. Yeah, you sell the customer, but when we getting paid, because
Mm-hmm.
what they have to focus on is really the money and everything else that has to happen with it, right?
Yep.
So we have Joel Millington indicating here. This is for the folks who are on Instagram. I'm just reading out something from Joel, and Joel Millington is saying, "Good point, Andrea. You could be profitable, but be in
Correct.
a cash deficit, which is a bad recipe." Could you explain that to me? Because normally when you're
Mm-hmm.
thinking profit, you're thinking, well, okay, I mean, profit is profit, right? So you're making
No,
profit, but explain that to us if you don't mind.
profit profit does not equal cash, right?
Mm-hmm. Hmm.
Think about it like, when you hear on TV, they talk about, I think it's like Forbes, and they talk about the wealthiest people, right?
Mm-hmm.
And they talk about, and they're on the top 100 or whatever list they have for them, right? And when they tell that figure, how much ever billions and whatever in net assets or whatever, that does not necessarily mean that they have that in a bank account, right? It's about in that mathematical equation, they talk about the worth of assets, etc. So bring it down to the level of a normal business. And profit does not necessarily equal cash, right? You could be
Mm-hmm.
turning over cash and not making a profit. Now, Joel's point is it was the other way around,
Mm-hmm.
right? But either way, it's not healthy. The way you measure profit is affected by things that are not impacted by cash, right?
Right.
So to arrive at your profit figure, you may apply certain things that did not necessarily come out of your bank account. So one main example, because of course I wouldn't want to get too technical, but
Right.
one main example would be like a notional expense, right? So for example, you have an asset. In calculating your profit, you buy a piece of machinery
Right.
and it wears off over time. So let's look at the car, right?
Mm-hmm.
Wear
Mm-hmm.
and tear of the car. So you have a vehicle for your business, wear and tear on the car. Now you're paying the service amount to get it serviced every year or every 6 months, as the case may be. But the actual value of the car is depreciating year
Right.
after year after year. That you're taking that to calculate your profit. But that's different to you paying to fix it, right?
Yes.
So I'm probably incurring, let's say, I don't know, $3,000 one way against my profit, but I'm actually spending five
Mm.
in cash. The
Right.
value went down by three, but I spent five. So
Right.
immediately you're seeing there's a disparity there,
Mm-hmm.
right? So cash does not equal profit,
Right.
right?
So here's another thing that I would like to maybe ask there, though, because again, you would think that entrepreneurs may not shouldn't really be focusing on that. So, and when I say entrepreneurs, whether you're solopreneur, sole trader, that
Mm-hmm.
type of stuff, like why is it so important for us to be paying attention to that? So, like, remember we were talking about the ladies who are, let's say, for instance, beauticians, nail techs, etc., etc.,
Right.
etc. I mean, I have an example in mind too, but I'll maybe ask you the question first, and I'll maybe come back to the example that we were talking about in the past.
Yeah. So why is it important? It's important because as an entrepreneur and a solopreneur, sole trader, etc., cash is king,
Mm-hmm.
right? Until you have built up a corporation or a business big enough to get things like credit lines at your bank or loans and financing, and you've built up a healthy reserve,
Mm-hmm.
your cash is king. And
Right.
you have to be able to manage that asset, especially let's say in the first 3 years of a business, right? You haven't built up any kind of history with anybody. Nobody knows the reputation of your business. The banks sure don't know you or anything. So more than likely, if you're going out there to get product from a supplier, they want cash. They're not
Mm-hmm.
giving you credit, right? So
Right.
you're gonna have to make sure that you could use your cash flow statement to match those ins and outs to know, hey, I want to buy product next month.
Mm-hmm.
I have to go down and buy product by wherever, and I need to make sure I have $5,000 to buy that.
Right.
Right. So that's why it's important, because as a small business, cash is really cash is really the most important asset.
Most right.
The most
So
important asset.
so we want to say thanks to Jared. So Jared is saying great conversation, and he also mentions, I'm just calling out something here from LinkedIn, guys, from Jared, and I'll read something from Instagram after. Jared also said yes, but we also have to make friends with finance, which means that sales has to make friends with finance. And Jared, I know Jared, he has always been saying that we have to make friends with all the
Yes.
departments because we want to have a smooth transition in terms of delivery to the customer,
Mm-hmm.
getting paid, etc., etc. All right,
Mm-hmm.
and also Shedron Collins on Instagram, they're saying that cash is the blood in the business's veins, right?
Correct.
So I'm going to bring up a conversation you and I had with an example from someone, and we can expand on it some more. So there was an example where you were sharing with me that one of your clients, their business has been running for a particular while, and apart outside of the bookkeeping thing, they had to show some history as it relates to their business. Right now, you were talking just now about past cash flow or something like that, right? um, how would your cash flow statement? I think for her, what she wanted to do was maybe buy a car or something like that.
Mm-hmm.
So, in essence, I think you were explaining to me that your cash flow statement, apart from your bookkeeping records, would be important because the bank is now going to be looking at that. So, remember
Yes.
that we spoke about before, guys, that the bank will be looking at it initially to start your business, but now that your business is running, you're not using it to start your business anymore. Now that your
Mm-hmm.
business is running, apart from your bookkeeping practices, the bank may say, okay, well, you are going to be doing this business. We're going to be giving you a loan for the next 3 years, right? What
Mm-hmm.
is your 3 year projection? So would that be an
Correct.
instance where your cash flow has to come in again?
Definitely. Definitely. Right. That's a critical one, right? And that's why it goes back to why I say you never do these things just for the purposes of going to the bank.
Right.
It has to be based in some sort of truth. It has to be based in some sort of reality, right?
Mm-hmm.
And the banks, they would think of it this way. Persons who are employed, you have a pay slip, right? And if you go to the bank or you go to any financial institution, they will ask to see your pay slip, and they may ask to see your job letter, right?
Mm-hmm.
Why are they doing that? They are doing that to understand where is your income going to come from for the next foreseeable future, for the time that you want the loan.
Right.
So if you're a permanent employee and you bring a job letter, they'll say, oh, this person permanent, so we should be good, right? If you're a contract worker, they'll say, can you bring your contract, and we'll see how long you will be employed, how long are you guaranteed to get this income. The cash flow, think of the cash flow statement for your business as the pay slip for your business.
Mm-hmm.
That is what they're going to use to assess you, to say, okay, can this business afford to pay this? Will this business have the money to pay? And that is why, and as we go back to where we talk about, say, cash is not profit. The reason why they're looking at the cash flow is because that is where you're going to find the money to pay them, right? Profitability, yes, they would want, obviously they'll use it to some extent, right? But the projection itself is saying, hey, I'm going to have this amount of money available to pay you for the next 3 or the 4 years or however long you're trying to take the loan for.
Right. So, and again, guys, so the reason why I brought that particular example up is because while having that conversation with Andrea a while back, it was an eye opener for me, because this person is in the beauty space, right? They've been doing it for a while, but here it's that they're coming to Andrea because the bank is asking for certain things, and they now need to represent that. The bank wasn't concerned about how much money they had in the account, and maybe looking through all of the deposits. They want to say, okay, you are going to be paying this thing in the future, so let's look at what that projection is, and then they will be basing their decisions on that projection.
Correct.
Yeah. Right. So I just want to read something from Shanice87. I think I'm pronouncing that properly on Instagram. Right. And she said, this is a real eye opener for me. As a new entrepreneur, it seems like a daunting task, but critical to the business. And I mean, if I can add something there, Shanice87. So thanks for that. Thanks for that comment. Is that one of the things that I recognized really, really early is that without it, I would have been like, if I didn't have Andrea as part of that, my whole business ecosystem, I would have been a little bit of a monkey pants, because I mean, it could be the littlest thing. I would call Andrea and I say, what is it that you think? Right? Because of the fact that I don't want to make certain mistakes as it relates to your business, especially when you're full time, right? Because this business for us, this is our retirement plan, everything. So we can't afford to make missteps. So I always felt that whenever I was leaving, or whenever I did make that move full time, the goal for any entrepreneur, whether you're a sole trader, whether you're a plumber, whatever it is, have somebody sit with you to really sort of discuss your accounts. Because when you are going to the bank needs these things. And I remember Andrea was also talking about bookkeeping best practices, and she was also referring to things for people who are not into the weave and all the other stuff. Well, use your receipt book and use a notebook and draft it up the right way, because all these things are important.
Because at the end of the day, that's what helps build the cash flow. We need records. We can't, contrary to popular belief, we can't build the cash flow out of thin air.
Right.
I've seen some. Trust me, I've seen some. I take one look at it and I was like, that math just don't work. But it has to be based in some sort of reality. It has to be based in some sort of truth. And you can't get that unless you look at where you came from. For those who are existing, you go back. You say, well, okay, let's go back and see how we performed over the last year and see if we could extract some kind of trend in order to project what's going to happen. And if you're brand new, you need to sit down and think about what your plan is. So that would involve, who do you plan to target? What is your budgeted, what is your budgeted sales? How you plan? Well, of course, that's where your business plan and stuff would come in. But it has to be based in some sort of truth, has to be based in some sort of reality. Because what you don't want to happen is that you hand this document, and we using the word bank, but I say bank to mean any financial institution and any investor. Right?
Oh, investors are good as well, right?
You could be going, if you don't like the bank and you don't want to go to the bank, fine. Somebody say, hey, I'm willing to front this money for you. Show me your business plan, show me your projections.
Right.
You don't want, when you use that document now, and let's just say we pull figures out of thin air and we come up with something, and then 8 months in, you realize what you put on paper, you cannot afford. Because maybe it was $2,000. We tried so good to make it look so good that because it wasn't based in any sort of reality, when the actual operations of the business started going, you realize, damn, I can't make that loan payment,
Mm,
right? So that's why it's so important that it's based in something and that it
mhm.
reflects what you're truly going through, because it could come back to bite you in the end.
Yeah. So I have two questions here on Instagram. We'll take these two Instagram questions, and
Mhm.
I want to tie it up a little bit with making a point on having a working relationship with your accountant, right? So question number one from again, help me if I saying this the wrong way. So question number one from Nakbi Neil Adams. They're asking, do you mean cash flow revenue is more important to the bank rather than cash assets?
Yes, I will. I'm not speaking from a place of the banker. I'm not a banker. But if we're talking about, it's one thing to have the assets sitting down there, right? But what they would want to see is your ability to continuously be able to generate the cash to pay them.
Mm-hmm.
If you have the cash sitting down there as an asset, so say you have $30,000 in the bank and you go to them for a loan for $30,000, they might just very well they will hold the $30,000 probably as a fully secured loan, but they will still want to see, are you in a position to pay this loan,
Right. And
right?
I think with those assets, because the bank could deem what you might consider a valuable asset, maybe not valuable to them. So I guess we will have to determine exactly what those assets are,
Yeah.
right? Because if the bank, they may not be interested in holding that as some sort of security and stuff like that, because the bank
Remember,
would be more,
it's a
yeah,
process for them as well, and
yeah,
it's very easy to say, well, let them just hold that, and if I don't pay, they could take the money. And there's a process in
right,
that, and the bank's very lean and efficient. They don't want to spend a bad cent, right?
yes,
And like I say, when I say banks, I mean anybody, any investor or financial institution. They don't want to spend a bad cent, right? So it's
right,
not, don't think of it as, well, I have money in the bank. If you're looking for any kind of financing, any kind of opportunity like that, anybody will always want to see what is the potential.
right. So I want to just circle back on something, right? So initially, when we started, I said that when Andrea asked me to do that exercise, I saw a few things as it relates to sales, right? We're always going to have a sales conversation in there, and what I saw was that there wasn't enough in the pipeline. That's one of the things that
Mm-hmm.
really came up to that stood out the most to me, right? Apart from everything else that we spoke about here, I saw that there wasn't enough in the pipeline
Mm-hmm.
that I needed to ramp up my sales activity, one,
Yes,
or look for higher paying clientele, two. So I may not have to sell more, but I can just find a few more clients that are willing to pay a higher price point based upon
correct.
the services and stuff like that,
Mm-hmm.
right? So those were the things that I had to start paying attention to. Even in terms of the number of projects that I wanted to do over a particular period of time, I think we also spoke, Andrea, about how we price the customers. So do
Yes.
I want to get one-off payments and then look for projects again, in between, or do I want to now,
Mm-hmm.
allow the customer to pay over a period of time? So,
Yep.
quote unquote, strategically, sort of shows a consistent flow of revenue coming into your bank account and stuff like that. Now, all of those things that we had that I just mentioned there, guys, comes from having strategic conversations with your accountant. And I always have to lay this plug here because for me, developing my business on through the support of ATR, Andrea's business, has been like a really, really big benefit. That's why I felt it's important to kind of bring this conversation to the table, because there may be other entrepreneurs like myself, and I know Andrea works with a lot of sole traders and entrepreneurs as well. When I say sole traders, I'm talking about folks who may have been doing this thing for like let's say guys who you may consider your plumbers, mechanics, and that type of
Mm-hmm.
stuff. They make more call themselves sole traders, right? Um, but they need the support or have the guidance of an
Mm-hmm.
accountant just as much as we do. Those of us who are trying to build a business in a different way.
Correct.
So I'm not sure if there's anything that you would want to add there, Andrea. And if not, then what the other thing that you could definitely give them is an indication as to where they can find you. based upon your social handles and stuff like that?
So, what I would say is, and it's something I always say, and it's becoming my mantra now, that you know any business from any size can always benefit from good business practices, right?
Mm,
So, like my tagline that I've kind of developed these days is that I help business owners develop better business practices, right? From simple thing as creating a bookkeeping system to full on maybe having somebody like me involved, like the way that I'm involved with you on a intimate level every day, every week, we do our checks and that kind of thing. But it's a discipline, right?
mm,
You and I have our standing arrangement that we meet. We have something in our calendars. You must talk to me,
yeah.
right? And that's a discipline that you've created for yourself, and that's a business practice. So no matter what the size of it, no matter the stage that your business is in, and the size of your business, you could always benefit from having something like that.
Mm,
Cash flows is one of them, right? As we're talking cash flows tonight,
mm.
um, because and like we said before, the cash. Somebody said it's the blood that runs through the
Yes, the
veins,
lifeblood of your veins. Yeah, rush
lifeblood.
through the veins of the
It
business.
is,
Yeah, yeah.
yeah, it is, because when you don't when you can't get that extra credit to buy your material, or you don't get that overdraft on
Mm,
your bank account, you need to work with what you have. And the cash flow process, developing it as a process and having it as a practice, really helps you to see your business and really helps you to make good decisions. And
yeah.
that's what these little practices do. They all accumulate to help you make better decisions for your business, however little, however small it is.
Mm-hmm.
So that's what I would say in closing. In terms of where you can find me, I'm on LinkedIn under my name, Andrea Rahu. Facebook and Instagram, it's under ATR Business Solutions.
Cool. So, guys, so we're wrapping this up. I definitely want to try more to bring more conversations like these in terms of the back end, the nitty gritty. Again, this is not going to be the second time. This is actually the second time you're all seeing Andrea, because there's so much that I have learned from her that I believe that she needs to be bringing to the table as well. So I'm bringing this from the standpoint of me talking to my accountant and bringing that valuable information to you. And
Mhm.
I do believe in best practices. I believe that if you were to follow all the practices as we would be doing in our 8 to 4, because you're going to a job and they have a structure and finances
Correct.
this and whatever it is, then there's no reason as to why when you start your own business you're moving 5k5. Take the same approach, build a structure around your business, have the right people involved, even if it comes down to things like having an attorney look over some of your contracts.
Yes,
Nothing wrong with that. There's
nothing wrong with
nothing
that.
wrong with that. As a matter of fact, that's something that Andrea and I talk about. I was
Hmm.
asking her the other day, listen, a customer hasn't signed a contract as yet, but we started services, what to do. Because I don't mind switching off, but but at the
Yeah,
end of the day, it's just really these are the type of
these are the
these are
things that come
business
up.
conversations.
Hmm.
So yeah. So we hope that you guys found this valuable. Thank you too for your Ideally Life. Good vibes. Hashtag cash flow. Thanks a lot, Micah Jeffers. Right. And we will come back again as a topic comes up maybe next 2 to 3 weeks.
Hmm.
But as I said, as entrepreneurs, as business owners, or aspiring or otherwise, let's make sure that we adopt and develop the right practices in our business to be better at what we
Yep,
do. All right, guys.
definitely.
Take care. Thanks, Andrea.
All right. Bye,
All right,
guys.
peace. Bye bye.